Hey there, investors. Ever feel like banking stocks are just too complicated to understand? Or maybe you're wondering how banks like DBS can keep making money when interest rates are falling. Well, today I'm going to break down DBS's latest quarterly results in a way that actually makes sense and show you why this banking giant might be a safe harbor in today's choppy market waters. In this video, we'll cover DBS's impressive income growth despite challenges, how they're making money beyond just interest, their smart approach to potential risks, and what this all means for you as an investor. I'll also share my take on whether DBS deserves a spot in your portfolio right now. Want to dive even deeper and get exclusive investing insights delivered to you every single day? For just $1 a month, you can become a premium member and unlock a wealth of additional content, including daily bank stock analysis, early insights into promising financial trends, and deeper dives into specific investment strategies that will give you a real edge in growing your wealth. Think of it as your daily dose of financial fuel. More on how to join after the intro. Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers, with over 850,000 reads and 53,000 likes. I've produced over 800 videos with more than 350,000 watch hours as of February 2025. I also focus on regional and global economic trends. Let's dive into DBS Group's Q1 2025 results. The big story here is how DBS managed to achieve record total income and pre-tax profit despite some headwinds. Their total income hit SGD 5.91 billion. That's up 6.3% from last year and 7.3% from last quarter. Pretty impressive, right? Their pre-tax profit reached a record SGD 3.44 billion. Though core net profit dipped slightly by 2% to SGD 2.9 billion. Why the dip? It's mainly because of higher tax expenses from the new global minimum tax of 15%. So it's not really about the business performance, just a tax change. What's really interesting is how DBS is making money beyond just interest income. Think of a bank like a business with multiple income streams. When one stream slows down, others can pick up the slack. That's exactly what's happening here. Their non-interest income jumped by 8.4% year-on-year and a whopping 25.2% quarter-on-quarter to SGD 2.22 billion. What's driving this? Record trading income and treasury customer sales. Imagine if you had a side hustle that suddenly started bringing in way more money. That's what's happening with DBS's trading business. Wealth management is another bright spot. Their fee and commission income was up 22% to SGD 1.28 billion, as wealth management fees grew from strong market sentiment and higher assets under management. More people are trusting DBS with their investments, which means more fees for the bank. But what about their traditional banking business? Taking deposits and giving loans? Net interest income for the commercial book rose 2% to SGD 3.72 billion. Their net interest margin, think of this as the profit they make on loans, dipped slightly to 2.12% from 2.14% a year ago. Why did their margins shrink? Interest rates are starting to come down, but DBS offset this by growing their loan and deposit volumes. It's like a restaurant making less profit per meal, but serving more customers. The total profit can still go up. Now let's talk about something really important, how DBS is handling risks. The world is a pretty uncertain place right now, with trade tensions and geopolitical issues popping up everywhere. DBS's CEO Tan-Su Shan specifically mentioned that recent escalations in trade tensions have heightened macroeconomic risks and market volatility. How is DBS responding? They're being cautious. They set aside SGD 205 million as general allowances, a prudent measure to strengthen their reserves in light of recent developments that have added to macroeconomic and geopolitical uncertainty. Think of it like putting extra money in your emergency fund because you're worried about job stability. It's smart planning, not a sign of immediate trouble. Speaking of trouble, DBS's loan book looks really healthy. Their non-performing loan ratio stayed steady at 1.1%. In simple terms, only about 1 out of every 100 loans is problematic. That's really good in the banking world. Their balance sheet is rock solid too. Their CET1 ratio, a key measure of a bank's financial strength, stands at 17.4%. That's well above what regulators require. It's like having a house with really strong foundations that can withstand any storm. Let's talk about something investors really care about: dividends. DBS declared an interim dividend of 60 cents per share, plus a capital return dividend of 15 cents per share for Q1 2025. That's a total of 75 cents per share, up from 54 cents in the same period last year. Now, you might be wondering, with all this uncertainty in the world, is DBS a good investment right now? Many analysts see DBS as a safe haven because of its strong financial position. Think of it as a fortress in stormy weather. Analysts have been raising their price targets following these results. Many have buy ratings with target prices in the SGD 47 range, noting that DBS stands out among the three local banks. What about DBS's own outlook? They've tweaked their 2025 guidance slightly. They now expect 3 interest rate cuts in the second half of the year, compared to 2 previously. They're also projecting that commercial book non-interest income growth will be in the mid to high single digits, slightly down from the high single digits they expected in February. So what does all this mean for you as an investor? DBS looks like a solid choice for those seeking stability, income, and some growth potential. Their diversified income streams mean they're not overly dependent on interest rates. Their strong capital position and prudent risk management provide downside protection. And their attractive dividend yield offers good income in a world where that's increasingly hard to find. But there are risks to consider. Global economic uncertainties could impact their business. Interest rate cuts might put pressure on their margins, and their stock price might not see dramatic upside in the near term, given macroeconomic headwinds. Think of DBS as the tortoise in the race. Steady, reliable, unlikely to win any sprints, but very likely to finish the race in good shape. It's the kind of stock that helps you sleep well at night while still giving you decent returns. So there you have it. DBS Group's Q1 2025 results show a bank that's performing well despite challenges. They've achieved record income, diversified their revenue streams, maintained a strong balance sheet, and committed to attractive shareholder returns. While there are uncertainties ahead, their prudent approach and safe haven status make them an attractive option for investors seeking stability and income. Remember, investing is about finding the right balance between risk and reward for your personal situation. DBS might not be the most exciting stock out there, but sometimes boring is beautiful when it comes to growing your wealth steadily over time. If you found this analysis helpful, please hit that like button and subscribe to the channel for more insights on stocks, finance, and wealth building. Drop a comment below with your thoughts on DBS or any other banks you'd like me to cover next. So, if you found this video helpful and want to level up your investing game with daily premium insights for just $1 a month, click the link in the description below to become a member. You won't regret having that consistent stream of valuable information that can help you on your financial journey. For more on Singapore stocks, check out my previous video on UOB Q1 2025 results analyzed by Iggy, where I dive into other stable income generators for your portfolio. Until next time, this is Iggy from the Invest in Iguana, helping you grow your wealth one video at a time.